Good morning and welcome to the Saxo Bank morning call for your Friday, September 28th. And the big thing shaking markets this morning is the Italian budget situation, where late yesterday, Althea, we had this populist government wanting to expand that budget deficit out to 2.4% to help expand some of its initiatives, the citizens' income and so on, and wanting to carry that out into 2021. We're seeing quite a reaction here in the Italian BTPs. Those two-year yields, which were actually falling yesterday, now sharply on the rise after the situation is developed. What's your take on this?
Yes, so what we are seeing at the moment is that the 2 years rising around the 25 basis point, which is a big move from 75 basis points to 100 basis point more or less, and the 10 years also is rising above 3%, around 20 basis points. So what we see here at the moment is investors selling off on a story that started to get better a few weeks ago, and now it's getting awfully complicated. And the reason for this is that people don't have a clear understanding of how the Italian government is working, because a couple of weeks ago we had all politicians saying that they would stay like below the 2% target, and now they are on 2.4%. Of course, this budget has yet to be approved. The parliament has to approve it by mid-October, and then the big question that is going to be what the rating agency are going to do, right? We have Fitch doing a review at the end of October, so this could be a reason of downgrade.
But it sounds like about a 2-week headline, or a 2-week timeline, I should say, for whether this goes through, is able to pass Parliament.
Exactly.
Okay. So in the meantime, we have a chart here just to show you. It looks to me, just based on a technical analysis, and often these yields fixate on round levels. You can see here that the high was about 1.5% in late August. We dipped well below 1%. And about the 1% level, we before we came in here to do this broadcast, we were at around 105 basis points. So I would suggest sort of the weekly close here, above or below the 1% line, might be some sort of sentiment indicator on the BTPs. If we go back to the charts, actually, I have a couple of how is foreign exchange trading the situation. The key sort of coincident currency pair here is Euro Swiss, and we saw a really strong rally there in recent days. Some of it on the ECB's talking about vigorous inflation. Yesterday, a really nice poke higher into the 114 plus. And that was even despite a weak euro elsewhere. So we saw, for example, dollar Swiss really pushing higher. You're seeing that on this chart here, above some interesting levels. It needs to probably get above 98. And of course, we need to see how this shapes up. For euro Swiss, though, is sort of the pure play, I would say, on the Italian situation. If it's diving back below 113, it looks like that's probably a situation where traders are concerned about the EU existential situation, and these spreads are widening again, and we all wonder what's going to happen next. Will the budget pass? Do we get into a situation where those yield spreads are spinning out of control versus Germany, for example? And so we'll be tracking that situation closely.
If I may chip in, I wanted just to say that what is very important is that there is Di Maio, which is the leader of the Five-Star Movement, that yesterday said that they are not scared of the spread rising of Italian BTPs against the Bund, and they are not afraid of the European Union. So here there is also a political risk that this rhetoric against the European Union starts to get awfully angry, basically. So this is a big risk that there is in BTP, and I believe that although today there might be, after the big sell-off, a little bit of rebound, in the next few weeks there is going to be full of reasons for continuous volatility.
And if the tide is turning towards away from fiscal austerity and towards more fiscal stimulus, that's going to be an interesting test, and you would suggest that at some point the core has to give in the EU if this whole EU existential problem is not to continue here. Finally, just while we're on the note of bonds, interesting to see that even though the U.S. We saw a little bit of a comeback in U.S. yields yesterday, but not posting new highs by any means. But dollar yen actually stretching to new highs. We have a chart here, and I'm scratching my head a little bit. Technically it's a nice break higher, but to me I need to see the U.S. Treasury market confirming this. I need to see that 10-year stretching higher. We did have a weak industrial production number overnight, perhaps helping to drive this break of the 113 plus resistance. And in general, across the board, one reason yen is weak is we have fantastic risk appetite strength across the board. BTPs in Italy notwithstanding. We've seen sort of the weakest emerging market currencies coming back, as you can see here, from the 1 week to 1 month currency performance. Those that are lagging in performance are those that are importers of commodities, and those that are heavily in the mix with exporting into China, where the concern is that their currency is weakening. And we continue to watch this. And Ole, you flagged to me that next week is this big holiday in China, and so we're sort of left adrift on the whole Chinese yuan situation and China's intent there.
Yeah, because we've seen the People's Bank of China just raising the daily fixing just ever so slightly over the past few days, and now they're going to be out of the market for the next week. So again, so it's more or less left to the market to decide to determine where the yuan is going to go. So we're obviously going to keep a close eye on the offshore yuan, the CNH, next week, and it just ties into to what's happening on gold. We saw another sell-off yesterday. I think
it's a big move.
It was a big move. I think we got a chart yesterday.
Yeah, we do.
And you can just see we broke below the 1190, which was, we've been in 1190, 1210 range for a while, but broke below, and now this morning we're challenging 1181. It's the 61% retracement of the rally we had in August. So really some quite important technical level here. If we break below that, then there is a further risk to the downside.
My eye fixates on that close there on the chart. 1175 was sort of the lowest closing day for the cycle.
Yeah, so we just have to conclude gold remains in a downtrend. We have not yet had a trigger to the upside. We need to break above at least 1210, and with the yuan next week potentially under some additional pressure, the upside there seems limited.
And then you've also got a bit of a focus on natural gas. We're getting into the heating season in the U.S., and stockpiles haven't built too well.
No, exactly. Looking at the chart, if we can see, there's not only oil that's been having a good time or driving higher this past couple of weeks. Natural gas is as well, and we're above $3 a therm, and if we close above 305 today, it looks like we have some air above us for the market to move further on. And the reason is, as John mentioned, on the right there you can see the injection into storage is well below the average we've seen for this time of year, and we are really running out of time for a sizable build. So that's not a problem now, but it potentially could leave the market exposed if we have a very cold winter in the US over the coming months. So I think underlying there's some support coming back into natural gas.
Okay. All right, let's close it out with a look at a very busy economic calendar slide today. We've got pretty much too much data on this slide here. A lot of stuff coming out today. I would focus most on the U.S. Treasury market and U.S. yields. We saw yields kind of picking up in Europe. Risk appetite's been picking up, but I think the U.S. bond market a bit odd, at least at the long end. And how do we react here to this PCE inflation data, as well as the Canada's GDP data later today? And then I think the big one, of course, is the Brexit situation. We've not addressed that today. There seems to be a pretty positive vibe around sterling. I did a FX webinar yesterday. You can check that out on home.saxo, where I went through the Brexit situation pretty thoroughly. I've sort of rejiggered the scenarios in favor of, I think it's most likely that the Tories are going to have a very hard time delivering a Brexit. We might end up in some sort of long delay situation, extending the transition period or the negotiation period, elections, what have you, rather than heading towards this deal, no deal type of situation in the here and now. Anyway, we have that Tory party conference this weekend, as you see on the calendar slide here. Next week we have China out of circulation, and at least in terms of market openings. Pretty interesting that with the dollar CNY situation where it is up, getting close to that 7 level. It's national or international ISM day on Monday, and then the services PMI day on Wednesday. An Australian RBA meeting that I think will be thoroughly uninteresting, as they have been for a long time. And then we close out the week with what I should have highlighted more in bold with the U.S. employment report, and specifically those average hourly earnings, which tipped the scales at the highest print for the cycle the last time around. I think that gets the whole inflation picture rather interesting if we see a 3% plus print. Not what's expected, but let's look for that. And how the market will react to further U.S. yield strength. That's it for us today. Have a great weekend, and we'll be back next week with the Morning Call.